The following is a presentation of TFNN. The Morning Market Kickoff with your host, Tommy O'Brien. Now, Tommy O'Brien.
Good Thursday morning, everybody. I'm Tommy O'Brien coming to you live from TFNN, 9:06 a.m. Thursday morning. We got less than 25 minutes to go until the start of trading, coming into a long weekend, Memorial Day weekend out there, 3-day weekend tomorrow. Things probably trailing off a little bit, but we get some economic data coming out today. We'll get into that in a moment. But right now, you get the S&Ps up by about 4 points. I got a 5-minute chart here in the S&Ps. We'll zoom in on the action overnight. You were as low as about 41.80 as recently as about 6 a.m. You see the volatility at around 8, and there's your spike on 8:30. We'll get into it in a moment. We have a pandemic low for unemployment claims. We have some durable good orders out there as well. We got some GDP as well, but nonetheless, markets up 4,200, we'll call it in the S&Ps, within a couple of points of that price level. Tech stocks pulling back a bit, 13,666. The Dow catching a bid. Look at that acceleration in the Dow. You're talking about from where we were overnight, you're talking about 250 points to the upside from where you were at 34,175. We're pushing 34,427 right now in the Russell, up about 0.6% right now, trading at 2260. Crude catching a little bit of a bid, just even in the last few minutes. Check out this acceleration on crude. Since 9 o'clock, we just spiked 50 cents in crude. We're back above $66. Now, interesting, as I mentioned, we got a little trading range going on here in crude. Let me just back it up for a 20-day hourly. Excuse me. We'll put it back. We're going to put it back on a 15-minute, 5-day to see. I was just talking about on this update that we were basically in a consolidation between about 65.50 and 66.50, and just like that, we're trading to the upside of that, right in the middle of that trading range on crude. Pretty tight trading range when you look at where we've been. Now, Monday, you accelerate to higher prices from Sunday night. You open Sunday night in futures under 64 since the end of Monday trading. So all of Tuesday, all of Wednesday, and overnight, we've been stuck in about $1 trading range. Usually, you would see crude prices rising with the long weekend coming up, right? We're going to be doing lots of driving, etc. Pretty strong indication in terms of crude hanging very comfortably with a price tag of about $66 for a barrel of light sweet crude. We'll jump to gold. Gold contract down about $5, hanging tough at about $1,900. We were as high as $1,915.60 in the price of gold yesterday, and notes and bonds. We're getting some higher yields today, folks. Just since I came on the program, we've had it tick up basically a basis point. We're at 1.615% now. We're up, down 10 ticks. We're negative 10 ticks. We have lower price, higher yield, negative 10 ticks in the 10-year, 130, 122, negative 29 ticks in the 30-year. And when you're looking at these charts, folks, it looks like it's a huge gap away, but that is a roll. That is a roll going on the Thinkorswim platform. They separate it out. You can see the roll for a continuous contract, but nonetheless, we're still, look at the action we had just since we were at 2 a.m. You were trading above 132 in the 10-year. We're now trading 130, 123. We'll jump over to the VIX. A declining VIX. We're sitting at 17.15 as we got about 20 minutes to go until the opening bell, and we got markets melting upward in the VIX. We might get a 16 handle. Remarkable. I'm going to back it up. Just 10 days on the VIX. Oh, that's the S&P. 10 days on the VIX. You don't have to go far, folks. About a week ago, you were sitting at 26. Sometimes the trades seem too easy, as in you could have said, you know what, things are going to repair themselves. Maybe I look for declining volatility premium as we come into the long weekend next weekend. Doesn't mean it would have worked out, but man, it's working out right now. We have the VIX going from 26 down to 17, but guess what? You don't have to go back too far. You go back 2 weeks ago, and we were almost hitting 29. You back down to almost 18, and just like that, we're back to 26. So volatility still present in this market in a big way. Okay, let's jump over to the economic data. We'll kick things off with unemployment claims. So unemployment claims come in at 406,000. That is applications for jobless benefits on an initial basis, an initial weekly jobless claim. 406,000. The market was looking for about 425,000. This is for the week ended May 22nd, so you're backing it up to last Friday. You see it on the chart. It's a declining number, and we like to see that. We're going to be talking to Kevin Hinks, as I mentioned in the update. We talked to him after our first break at about 9:15. He made a great point last week that not a lot of people think about, because I was talking to him saying, man, you know, we're still at about 500,000 people on an on a weekly basis filing an initial jobless claim. But you have to consider, folks, that normalcy in any normal type of environment, you're getting 200 to 250,000 in a very healthy economy just because you get churn. You know, we got hundreds of millions of people in the U.S. We have 100 plus million people working. A churn of 200 to 250,000 just losing their job on an initial basis is kind of a normal run for the economy. So we're sitting at 406, still well above the 2 to 250 you'd look for in a healthy economy. But you don't have to get back down to zero is the point. You get back down to 250 or 300,000, that's it. We're back to normal numbers. Now, prior to COVID, the record on a weekly basis was, I think, 692. We had never seen a number on a weekly basis above 700,000 before COVID. You know, we've seen some big numbers, but not all at once. Well, we saw like 6 million at the beginning of COVID. You see the spikes, and we've backed off. We're at 406, a pandemic low. What else we got going on in terms of coming out, checking out the numbers? So we also had, the Commerce Department, they had a second reading of first quarter GDP. They left that unchanged at 6.4%. And then what you get into, this is what I get into, orders for U.S. business equipment rise more than forecast. But this is double-edged here in terms of what they have going on. So core capital goods orders, okay? We had a lot of economic data. A nod to our man Kevin Hinks again. He was giving us the heads up, folks. The market was kind of waiting for some of these numbers today. Core capital goods orders, a category that excludes aircraft and military hardware, seen as a barometer of business equipment investment, increased 2.6% after a 1.6% gain a month earlier. So that number was out. But bookings for durable goods, here's the miss. Items meant to last more than 3 years unexpectedly decreased 1.3% from the prior month, reflecting declines in orders from motor vehicles and military aircraft. So the median estimate was looking for 0.8% for durable good orders. So they were looking for an increase of 0.8% in durable good orders. That was a decrease of 1.3, huge miss. And they were looking for a 1% gain in core capital goods bookings. And that's where we come in with a number of like 2.3. So kind of a little bit of a miss there, especially a big miss when you look at the number they were looking for durable goods, a decrease in that number out this morning. Okay, what else we got going on? Let's jump to some of the stocks real quick that are moving this morning. We'll jump to, how about Dick? No, we covered Dick's, but let's pull it up because that was a rocket ship yesterday, man. You can't overstate from 84 to 99. What I was going to talk about, another rocket ship, is Best Buy. Their numbers, pretty staggering. We'll get into them later in the program. We're going to jump around a bit just quickly to some of the equities before we get into the hardcore numbers. But Best Buy, staggering numbers in a big way. They accelerate higher. They're out with their numbers this morning. You got Best Buy trading about $3 higher. You put this thing on a 3-year weekly, you can see we're pushing about 120. You are right up at the upper boundary line that Best Buy has reached here. Yes, you rose above it to 128.57 a couple weeks ago, but this is a weekly chart. You see bumping up against those levels. You put it back on a daily, see a brief rise for a couple days. We're going to open about 120. That area, a little bit above that area, maybe you're looking at about 122, correlates to all those highs. A little bit of resistance. We'll see how Best Buy reacts on the open today, but we got a bid right now above 120 on Best Buy. We'll jump over to Nvidia. Nvidia out with their numbers. They are basically flat on some strong numbers. They're out with their numbers last night and within 30 cents of where they traded for a $628 stock with their earnings. Volatility premium getting sucked out of that equity, man. No movement at all. We'll see if that holds when we come back for the open at 9:30. But we'll be talking to our man Kevin Hinks next. We still got earnings, folks. We got a lot of economic data today. We got 2 days left of trading before the long weekend. Stay tuned, folks. We'll be right back.
Golden ratios give shape to everything in our world, represented in the Fibonacci sequence. These special numbers define the patterns that make up our universe. Not even markets can escape the omnipotence of these ratios. Larry Pesavento is a 45-year market veteran who has published nearly a dozen books on the powerful patterns we find in nature and their relationships with the ever-elusive markets. Larry's newsletter, Fibonacci 24/7, will teach you to harness the power of these natural golden ratios in order to create successful trades. Fibonacci 24/7 is designed to teach the tools you need to identify and act on these undeniable and reoccurring patterns. Sign up for Larry's newsletter, Fibonacci 24/7, and you will also receive free access to his trading webinar, Trading Strong Trending Markets. Try out Larry's newsletter risk-free. All of TFNN's newsletters come with a 30-day money-back guarantee. TFNN, educating investors.
If you're not currently using the TAS Profile Scanner when looking at setting up your trading opportunities, then your arsenal is short a mighty weapon. The TAS Profile Scanner is a standalone piece of software that instantly filters over 2,500 global financial markets such as stocks, ETFs, commodity futures, and Forex. Headed by Steve Dahl, TAS understands that in today's technological world, the use of top-flight software applications and technical analysis expertise is essential to successful trading in today's market. You also gain access to the webinar that Steve Dahl and Tom O'Brien just hosted, The Best Way to Use the TAS Profile Scanner to Profit. This webinar archive is available for all subscribers immediately upon signing up. All new subscriptions also come with a 30-day money-back guarantee, so you have nothing to risk. Start your subscription by visiting the front page of TFNN.com today, and you'll find the TAS Profile Scanner under the Services tab. Sign up today.
Hey there, I'm Andy Arbertine with Tiger Precious Metals and Stones. Whether you're looking to buy and sell precious metals or trying to find the perfect diamond ring, I'm here to help. I have over 15 years of experience with diamonds and precious metals. You can call me directly at 727-329-8245, and I will personally answer any questions you have and help you find exactly what you're looking for. I will be your personal concierge in the metal and stone business. Give me a call today, 727-329-8245.
Many of our new listeners have heard about The Tiger's Den. The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of the TFNN shows, plus see all of the charts as they happen live and have access to archives of all of those charts. You can test drive The Tiger's Den absolutely free for 30 days and greatly enrich your knowledge of these markets and how to make your money work for you. Details on The Tiger's Den are on the front page of TFNN.com.
Welcome back, folks. We have markets melting upwards as we wait for that opening bell. It is 9:18. We got about 12 minutes to go, and we get the S&Ps now up 9 points above 4,200, trading 42.01. NASDAQ 100 barely in the negative by about 16 points, and the Dow showing some strength, up 0.5%, up 175 points right now, and the Russell up 0.75% right now. Putting the Russell on a quick daily to see. We're trading right now at 2263. Bumping up. I mean, the higher territory here, you're looking at about 2,300. We've been on a couple occasions. The Russell 2366 for all-time highs in the Russell. All right, jumping back to Best Buy. So Best Buy right now has a bid ask of about 121. You see where we are on the chart. You're going to be up about $4 to $5 on the open this morning. More like $4. We'll call it $4 from 117 to about 121. Jumping over to the numbers on Best Buy. Strong numbers. Sales jump 36% is the headline. Consumers splurge on electronics. Retailer raises the forecast. You love to see the raise the forecast, folks. It's not what you did for me in the last 90 days. It's what are you going to do for me in the next 90 days, the next year, etc. Said Thursday, sales grew 36% in the fiscal first quarter. Stimulus-fueled spending spree included consumer electronics. Shouldn't be too surprising there. Raised the forecast for the year, seeing demand continue into the second quarter. The CEO said strong housing market has inspired consumers to invest in technology and appliances. Earnings, $2.23 versus $1.39. And how about revenue? The revenue beats in some of these companies, folks. You're talking about $1.2 billion of extra revenue in the span of 90 days. Not a bad business to be in. Net income, $595 million. Don't really care what it was a year earlier because that's got no basis going forward. But nonetheless, it was 195. Remarkable. They were making money a year ago. Excluding items, there's your $2.23 a share, and there's your net sales of $11.64 billion. As I mentioned a year earlier, not really an important number to look at. Online and stores open at least 14 months grew by 37.2%. Market was only looking for 22.4. These analyst expectations, just I understand that we're exceeding expectations for the economy roaring back, vaccinations taking hold, right? All of that. But the market is just outperforming in staggering levels when you think about the expectations. But guess what, folks? The stock charts, the prices of these equities have gotten ahead of the numbers on many times. You might see a number that looks for, they were looking for 22.4%. But keep it in mind, folks, we're only up $4 this morning. There was a lot of acceleration priced in. I mean, since March, you just had Best Buy trade from 95. We're going to be at 120. That's $25 on a 90 $5 stock. That's more than a 20% pop from the bottom of the trading range of about $100 on Best Buy. Huge accelerations in a big way. All right, what else we got? Let's take a look at Nvidia. Nvidia. So they're big, of course, in chips. They sold 155 million in crypto mining chips last quarter. How's that crypto sector doing? Wonder how that will play out when you have crypto cut in half, basically, with Bitcoin hovering around 38,000 to 40,000. We'll pull that up in a moment. In February, Nvidia released new processors specifically for mining cryptos. They booked 155 million in revenue from crypto mining cards in the first quarter, but Nvidia CEO talks about the new product line as a way to protect the company's PC gaming business, kind of segmenting them out a bit is what you have in there. Nonetheless, we'll jump over to Nvidia. Nvidia shares right now, as I mentioned, kicking off the program, remarkable. You're out last night and you are basically flat on Nvidia, but check out the chart, right? I mean, you're pushing all-time highs. All-time high is 648. We were just trading in March 25th of under 500. You're going to open today at about 630 on Nvidia shares. All right, jumping around, what else we got going on? We'll jump down the list. We talked about Best Buy. Snowflake, they're out with their numbers for the first quarter. A little bit of a miss. So they, let's see, smaller than the 16 cents. Yeah, so they lost 11 cents a share. Let me do that again. Snowflake, they lost 11 cents a share. Market was looking for them to lose 16 cents a share. Revenue top forecast, but shares are lower as losses grow at a similar rate to its sales. Basically just missing the mark. On their first public, I think that might be one of their first publics. Let's see how far they go back. Snowflake, no, they've been out. Whoops. 230, yeah, we're a little bit lower on those numbers. There's quite a spike last night. They've clawed most of it back to 230. Remarkable sometimes the move you get, folks. We trade down $20 last night on those numbers initially. They were growing something like at 92%, I heard one analyst talking about today, as opposed to growing at 110% previously. Staggering, some of these public companies, the expectations that are built up. But when you are a tech company and you are growing, you better not start decelerating your growth rate. They're a cloud data provider. Platform enables customers to consolidate data into a single source to drive business rights, build data-driven applications, and share data. Cloud data, folks. It is a big deal going forward. We'll take a look. That's a nice segue to Salesforce. We have some Salesforce in my newsletter, Rocket Equities and Options. If you haven't tried it, folks, give it a try. I encourage you. Everything we do at TFNN, a 30-day money-back guarantee. Now, I talk about Salesforce. They got their numbers after the bell tonight. They're a cloud player in a big way. Of course, provider of enterprise software delivered through the cloud with a focus on customer relationship management, CRM. Ingrained in our lives forever. And you got the daily. We're pushing basically 230 right now. Been talking about this in my newsletter. I mean, you have an area right now, basically, that 240-ish has been an area. Number one, it acted as support going back to before it kind of fell out of bed in November. Now it's acted as a bit of resistance. We're right in the middle of that kind of area that we've been bouncing around in. 240, probably the next stop on the upside for Salesforce. And they'll be out with their numbers after the bell tonight. Market pricing in about a $10.17 move on Salesforce. So you're looking at just shy of a 5% move, maybe 4 to 5% move on their numbers coming out after the bell tonight for Salesforce. Continuing to go down the line, Dollar General out with their numbers. How about $2.82 a share? Market was looking for $2.19. Revenue exceeded estimates and comp store sales dropped less than expected. They raised the full year forecast. I'm going to get to the end of this because it says they're trading lower, right? We'll see if they still are. Raised the full year forecast, benefiting from a new round of government stimulus. I mean, read all of those things that I just talked about, folks. Earnings per share, $2.82 versus $2.19. Revenue exceeding estimates. Comp store sales dropped less than expected. Raised the full year forecast. They're going to benefit from a new round of government stimulus checks. And guess what? After all that, Dollar General, DG is their symbol. Okay. They're higher. Thank goodness. I said, what's going on in the world, folks? Point being, it's just the expectations are across the board so high. The expectations are at a level that is pretty astounding when even initially, You have a company like Dollar General actually spike lower this morning on those numbers. You heard what I just said, just staggering beats across the board, but nonetheless, not quite what the market was looking for. Maybe just not quite what some of the other retailers have put up. I mean, you go back to the numbers that Target put up, Walmart put up, staggering beats in a big way, and even they traded lower. Market, really the risk to the downside for some of these retailers. A lot of optimism built in. We all know the amount of savings that we have built up as Americans. We all know the amount of stimulus that we have built up that's going to go to some of these retail stocks as well. You've seen accelerate higher. We have some Walmart equities option. Pretty awesome numbers. Right now, you get Dollar General. It's up about 2% right now. 1 to 2% on the open. We'll see how they trade on the open, though. But you got markets melting up as we got 3.5 minutes to go until the opening bell. S&P's now up more than 12 points. You're talking about 0.3% in the positive. NASDAQ 100 barely in the negative by 4 points right now. We got 3 minutes to go in the opening bell. We'll see where we go, folks. Stay tuned. I'm going to be coming back with that opening bell. We'll see what's moving. Give us a call, 877-927-6648. Be right back, folks.
Hi, folks. This is Tom O'Brien. The printing presses are working 24 hours a day, 7 days a week. The U.S. deficit has risen 200% in 1 year with no end in sight. The markets are looking for an additional stimulus bill to get us through this once-in-a-generation pandemic. There is no free lunch, folks. The more stimulus dollars put into the marketplace, the less your dollar is worth each and every day. This is the time to protect yourself with a portion of your portfolio in the metal market. The Gold Report comes out each Monday morning. I bisect and dissect the dollar, silver, gold, the XAU, and the HUI. The Gold Report is a long-term hedge against the dilution of your buying power. The U.S. has put more than $6 trillion into the marketplace in the last 6 months, with more expected in the next few months. The market did and does need the stimulus, but it will have long-term implications on our buying power. The Gold Report comes with a 30-day money-back guarantee. Go to TFNN.com and order the Gold Report now. Protect your buying power. Order the Gold Report now.
You could be making money off the stock market. And if you're already making money off the stock market, you could be making a lot more. Check out TFNN and Tiger TV and get expert investing advice to give you the power to control your financial future. Go to TFNN.com and find the newsletter for you. Whether you're into trading gold, metals, futures, currencies, or options, you'll get advice and analysis to help you seriously get ahead. TFNN also features trading services with a 30-day money-back guarantee for new subscribers, as well as TFNN's Tiger Den trading room, trading software, and educational webinars for all trading levels. And make sure you check out Tiger TV for free on TFNN.com or TFNN's YouTube channel for live financial content from 8:30 a.m. to 4 p.m. Eastern on market days. Stop watching on the sidelines while other people get rich and become the investor you were born to be. TFNN, educating investors.
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Welcome back, folks. We got markets open and we got S&P's up about 12 points right now. The Dow up 212 12 points, accelerating higher. We're pushing almost 34,500 right now in the Dow, and we got the Russell up 15 points at 2262. Bitcoin back above 40,000, up $1,700 on the session, 40,260. We get the gold contract this morning, giving back some of the gains we had over the last couple days. Gold at negative $7 at 1896. You got silver off 13 pennies this morning, 27.74, and notes and bonds. We got a little bit of lower price and higher yield right now. We're looking at a yield just above 1.6%, 1.606%. The 10-year negative 8 ticks, 131.24. Yes, and we got the 30-year negative full 23 ticks at 156.07. And let's take a look at the VIX as the markets open up. Not quite a 16 handle yet, but volatility getting sucked out of this market. We got 17.27 so far. On a volatility index. All right, let's check back some of the stocks that are opening up with some of their earnings from last night. Nvidia out with their numbers last night, strong numbers. They're down about 0.5%. Dollar General spiking a little bit higher, up 1.5%. How about Dollar Tree, though? Not the same. Down 4.6%, catching a little bit of a bid on the open, but we're going to put this thing on a daily. It's quite a drop-off. I mean, let's back it up to even a 3-year weekly, right? My goodness. I mean, you're just basically back to where we were towards the end of 2019. You came into COVID at a price of about 93. Just like that, we've now traded from 120 to 102. Now, Dollar Tree, pulling up their numbers, lower than expected earnings outlook. It's all about outlook, folks. It really should be, right? Because really, I'm telling you something, no. It doesn't matter what you did in the past if things are going to be good in the future. It doesn't matter if you did well in the past if things are going to be rough in the future. They lower than expected earnings outlook for the full year. They beat estimates on the top and bottom line for the quarter. Comp store sales rose more than expected, but they said for the full year, not quite going to live up to expectations. Not what the market wanted to hear. For Dollar Tree, continuing to slide now, down about 6.2%. Let's check out Best Buy. On their numbers, they're up 3.6%. That's a weekly. Let's put it back on a daily. You're pushing the upper boundary lines of Best Buy. You're right up against where we basically have been consolidating to the upside. I mean, look where we were, right? We were back to Best Buy in August. You were at a price level of $119.48. You were back there in October for a few occasions, all the way through to November. We got back to just right at this price level in February. And then basically since March 19th, you've been shopping around with this being the upper boundary line. Yes, you got up above this level on 1, maybe 2 days before a pullback, but you're pushing really the real highs of Best Buy, 121.81, strong numbers for Best Buy in a big way, as consumers spending some of that stimulus money, sending some of that savings on electronics, maybe as the housing boom continues, as one of those notes read that we read this morning. Okay, jumping around, continuing down the line of what we got going on. Williams-Sonoma out with their numbers. Again, just staggering the beats that they have versus the consensus estimate. They earned $2.93 a share. Market was only looking for $1.83. In any other universe, these staggering beats would just be through the roof, but the market has come to expect them because all the other companies are beating in a big way. Walmart, Target, etc., right? The houseware retailers' revenue came in above forecast. It gave an upbeat outlook as shoppers continue to invest in their homes. Kind of similar to Best Buy, right? A little bit of a different story, but Best Buy Electronics investing in some of their new homes. Williams-Sonoma, this thing's been quite a rocket ship. WSM this morning, giving it back. Actually negative. I mean, look at these. These are just staggering. If you're a bull in Williams-Sonoma and you see these numbers come out, and you were higher pre-market, we'll put it on a 15-minute, and just like that, stocks open, and they say, no, we're not comfortable just being too much higher. Now, you put this thing on a 3-year weekly, not too surprising to see why maybe expectations already in this equity. Pre-COVID, we're trading at 75. You trade down to 26 at a low, and just a couple weeks ago, we were trading at 195. So really, the risk here was to the downside, folks. All the market acceleration priced into this equity at a time when their last earnings, you really accelerated from a price of 134, this is a weekly, to 177 on that weekly bar. We come into this earnings event for the week. We are positive on the week. And look at this, as we're talking about, they're fighting, the Bulls and the Bears, with Williams-Sonoma down about 0.3% now. Strong numbers, though, and strong equity considering where we've been in the last year for Williams-Sonoma. American Eagle out with their numbers. They beat estimates by 2 cents a share. They earned 48 cents, revenue slightly above projections. They benefited from increased spending by customers who received stimulus checks, boosting demand and cutting the need for markdowns. Yeah, I was going to say, compared to some of the other analysis, analyses of the stocks, not quite maybe living up to the same deal. We're down 3.8%, but pretty similar story in terms of a lot of growth priced into this equity already, continuing to accelerate higher. We're now just sitting right near that 35 number, down 3.6% though for American Eagle on their numbers. Yeah, so Walmart and Gap, let's talk about this one. All right, so we have some Walmart for disclosure in my newsletter, Rocket Equities and Options. It's a strong fundamental equity for sure, and I'm always tying in technicals as well. You got Walmart, you traded all the way down to a price level of, in March, you're talking about a low of 126.28. Since that time, you're up about 17 or 18 bucks. You're pushing a 15% pop. Now, we had it really fall out of bed during its last earnings season, where Walmart, we came into the earnings event accelerating higher on February 17th. This is an earnings season ago. You gap lower on their numbers following the release of their earnings. That gap correlating from about, we'll call that level about 141. The higher boundary line about 144.50, 145. Walmart's going to need some acceleration to push through those levels. But really interesting when you look at, now, I'm going to give you the case here a little bit, okay? Walmart, you're talking about an equity right now that is valued at about $402 billion. If they get their act together and work on kind of, whether it's the bank of Walmart, right? You're seeing all these, it's to have a $400 billion market cap when you think about the reach and the amount of consumers a company like Walmart touches on even a weekly or daily basis, even the amount of people in the U.S. alone that do business with Walmart, that count Walmart, Walmart counts them, I should say, as their customers. They have a relationship with those consumers. That's an opportunity, folks. You're trying to see them. Maybe they're going to go into the bank of Walmart. Many of the customers Walmart uses are very underserved in the banking community, as in they don't have bank accounts. Maybe they're just cashing checks. You pay an inordinate amount of fees without a bank account. You end up having to pay for cashing checks. You end up paying fees all over the place. And then you see whether it's Walmart trying to get into TikTok, right? Those are the things you like to see. A super confident company that is ingrained in society. They're not going anywhere. And with that, we have a chance for real growth in this equity. I mean, you accelerated from 101 at the lows of COVID to 153. Okay, now you look at where we are, a little Fibonacci number. Whoops, let's get the Fibonacci number before we head to the next break. Our drawings on the Thinkorswim platform. There's our Fibonacci retracement number I love to take a look at. We're pulling it up. And folks, how about it, right? 50% on the dot from the lows of COVID to the highs we had in November. 50%, we've now risen. And as I talked about, we're basically right in the middle of that gap from their last earnings event. I'm going to take that Fibonacci number off of here, remove that drawing so you can see the clarity. And you really want to see Walmart accelerate through this area. And we're pushing the upper boundary line. Walmart up about 0.6% with the market up about 13%. And Walmart and Gap coming together to create an exclusive home decor brand. So they're going to launch a new brand, Gap Home, with bedding, bath, and decor. Debut on Walmart's website June 24th, less than a month. Interesting stuff there. Walmart, 143.10, up about 0.6% today. Stay tuned, folks. We'll be right back.
Are you in the market for buying or selling real estate in the Bay Area, including the surrounding St. Petersburg, Tampa, and Clearwater markets? Tiger Real Estate LLC is a firm that has extensive experience in the Tampa Bay area. Whether you're looking to sell your current property for maximum value, or you're in the market for a second home or investment property, Tiger Realty has the experience across all areas of real estate in the Tampa Bay area to help buyers and sellers make the most informed decisions across all price levels. From the price you should be paying per square foot in certain up-and-coming areas to the type of cash flow investment properties are capable of creating, Tiger Real Estate can help you make the best decision when it comes to all areas of the market. Before you make one of the biggest decisions of your financial future, call Tiger Real Estate LLC today at 727-329-8322 or email us at tiger@tfnn.com. That's 727-329-8322. Call us today.
Technology around us is changing every day. With so much happening, it can seem impossible to keep up with all the information. David White's investment newsletter, The Technology Insider, is designed to give you all the information you need to understand the technology that shapes today's markets and tomorrow's future. David White has made his living staying on the cutting edge of technology. His weekly newsletter will give you specific recommendations for value tech stocks, as well as entry prices, target prices, and stops to set for each trade. Dave delivers his weekly newsletters every Friday with updates throughout the week. You can get the Technology Insider at TFNN.com for only $37.50. Sign up for David's newsletter, The Technology Insider, and get an inside look at everything the technology sector has to offer. Try it risk-free today with our 30-day money-back guarantee. TFNN, educating investors.
Will the S&P 500 continue to climb? For bold trades on U.S. large-cap stocks in either direction, trade SPXL, SPUU, or SPXS. Directions Daily S&P 500 Bull and Bear Leveraged ETFs. Direction Leveraged ETFs. An investor should carefully consider a fund's investment objective, risks, charges, and expenses before investing. A fund's prospectus and summary prospectus contain this and other information about Direction shares. To obtain a fund's prospectus and summary prospectus, call 866-476-7523 or visit directioninvestments.com. A fund's prospectus and summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foresight Fund Services, LLC.
Don't forget, you can listen to TFNN live on your mobile device 24 hours per day. Go to TFNN.com, then hit Watch Tiger TV. That's TFNN.com, then hit Watch Tiger TV for the latest market information.
Welcome back, folks. We got the S&P's up about 13 points right now, 4206. You're talking about only 32 points away from all-time highs in the S&P right now. Tech stocks backing off a bit. NASDAQ 100 off about 34 points right now. You get the Dow showing some strength. How about the Dow within about 500 points of the all-time highs? We're up 0.75%, up 250 points in the Dow right now, and the Russell up about 0.5% at 2259. Jumping back to gold, a little bit of a pullback in gold, but it's been quite a run recently for gold. We're off about 0.5% at 1894. And again, those notes and bonds continuing to get some lower price and higher yield. You get the 10-year. We're talking about a yield right now, 1.613% on that 10-year. And let's check out this VIX again as we keep our eye on the VIX coming into the long weekend. 1720, the low on that VIX right now as we inch towards a 16 handle potentially is coming into that long weekend. It would make sense, folks. If it's not happening right now, if it's not happening tomorrow, when's that long weekend begin? It's happening pretty soon. People are itching, I imagine, to get out and enjoy that long weekend. Excuse me. Okay, let's jump around to some of the stories. So, Amazon. We have some. I have some Amazon for retirement purposes. Disclosure. So down a bit, down 0.3%. Quite a surge higher yesterday to $32.95 before giving back some of those gains. Amazing how many articles I'm seeing on Amazon this morning. So number one, they're going to get their new CEO July 5th. Andy Jassy. He is Amazon Web Services head right now, I believe. He's going to be taking over. That kind of points to where the future of that company is going, folks. Amazon Web Services, the cloud. He'll be taking over July 5th. The 27th anniversary of the company's incorporation. Really remarkable that you have a company like Amazon. Seems like a long time, 27 years. Not when you think about, though, that brings it back to the company wasn't even around. Talking about what, 1994 that is? Just remarkable. So yeah, Jassy, he runs Amazon Web Services Cloud Computing Division. He's going to be the next CEO. That was announced in February. Bezos, though, he's going to continue to run that company, folks. I believe he's going to stay on as chairman. A lot of the articles in February when they announced this news said that Bezos had already somewhat taken a little bit of a hands-off approach to the details that were completely necessary on a day-to-day basis. He's still making the big decisions that'll push Amazon one way or another in the future. But Jassy, who runs AWS, he's going to be coming in that date, July 5th. They'll be talking about that he will take over as the CEO of Amazon. Now, it's really interesting, jumping down the line. Yesterday, the news was they bought MGM for about $8.5 billion. The Bond portfolio, James Bond, all the films in MGM, along with many other movies and shows incorporated in there. One thing talked about antitrust, but probably not going to be a big deal. Lawmakers from both parties, antitrust advocates protest the deal. Merger presents an early test for Biden antitrust agenda. But I imagine it's going to be okay, folks, because there is a tremendous amount of competition right now in the streaming. All right, you cannot argue that there's not enough competition in the streaming sector right now. And that is, as somebody who's a huge bull on Disney, Netflix is a juggernaut that's going away no time soon. Now you have Discovery and AT&T forming their own media company as well, let alone the many other companies out there. Paramount Plus is out there, right, from CBS, etc. But Amazon's takeover of MGM, fresh criticism. I wouldn't keep my eye on that at all, though. It's going to happen, folks, in a big way, and it's probably already factored into Amazon. Backing off a bit, Amazon as tech stocks pull back a bit. All things considered, you take a look at Amazon. We just been in consolidation. That's a 3-year weekly. Bottom end of that consolidation about 3,000. Top end about 3,400. We have a couple tails above that 3,400 price point. We're sitting at about 3,248 right now in the price of Amazon. Let's check out some of the other FANG stocks. We'll put it back on a daily. Microsoft shares so far this morning down a bit as well, down about 0.2%. Google has been so strong. Look at that Google. We're talking about pushing almost all-time highs. You're within $21 of Google. Now, Google, they're an advertising juggernaut. I'm telling you, folks, YouTube, if you're not around young people in any way, and I say young people as in all the way from the age of toddlers to through high school and probably after college, myself included. I'm not a young person anymore, but I watch a number of programs on YouTube, whether it's Tiger TV. We stream everything we do on our YouTube page, folks. Head on over to YouTube, search TFNN, subscribe to our page. It's completely free. Everything we do, we archive there. There's just a tremendous amount of content, whether it's you're watching, a podcast creator that you love, there's just anything you want. YouTube is its own entity, and it's going nowhere. So that is ingrained in our society in a big way. Probably part of the reason why you're seeing Google, where they're just crushing it in advertising, the number of people watching YouTube videos, the number of ads they're selling to people watching YouTube videos, etc. Google pushing almost all-time highs on that, and Facebook shares right up there as well. We're down 10% today on Facebook. But again, you're pushing right near all-time highs after Facebook crushed it out of the park on their earnings last month as well. Okay, jumping around to what else we got going on, jumping back to some of the stocks that are moving this morning. Workday is the one I wanted to cover. Out with their numbers, they beat estimates by 14 cents a share with 87 cents per share of earnings. They make human resources software. Revenue topped estimates. Despite the beat, they fall in the pre-market. Let's see how they're doing with the market open. WDAY is their symbol, and they're falling even more, down about 3.5% for Workday on their numbers on the open there as well. All right, let's see what else I got pulled up here in terms of stories we're taking a look at. So we talked about weekly employment claims, we talked about Best Buy, we talked about all that. This one's interesting. So I don't know who, I've said it before, I don't know who is Kathy Wood's public relations specialist, but man, if you want to pump something, get that person on the line, because she is just everywhere all the time. At a time when I believe her flagship fund, the ARC Innovation one, is down about 30-something% or something. Let's pull it up. And she had quite a run as Tesla took off, and there it is from 160 as a high back in February, let alone you started the year at about 124. Today you're down 1.6%. You back this thing's up to see the full run. Yeah, I mean, that's why you get some press, folks. You go from 33 to 160. You're back to 109. But they're talking about in here, I mean, she sees 500,000 for the price of Bitcoin, folks, okay? If that happens, she's going to make a lot of money because she's got a lot of Coinbase. She's got a lot of Tesla. I mean, Coinbase is sitting at 240. It's below its reference price of 250. It's a staggering number, folks, as in if you're piling into that fund, you know what you're getting in that fund. What I don't get is that, she's getting all these accolades on the way up because she was a huge tech bull as things surged, rightfully so. But as things have pulled back a bit, she's still getting all the attention. And it's kind of good attention almost. It's a good spin on things, as in there's been no outflows. I saw one article talking about it's been no outflows when you have a fund pulling back like 30% from the highs almost. It's even more than that, right? What were we just at? The numbers are staggering. See, now 1.7%. What were we down? Yeah, from 160, we've lost $50. Yeah, it's off more than 30% off the highs, and there's no outflows. That could be a little devastating, folks. They're holding on for dear life, as the expression goes. But man, I mean, you look at where Bitcoin is, all right? We're sitting at 40,000. there's room to the downside here, folks. And I think Bitcoin's going to be around forever. I think Ethereum's going to be around forever as well. And I think Dogecoin is not going to be around forever, if you want the full take on it. But nonetheless, you get some articles out there talking about it. And just be careful if you're in any of those funds, folks. Like ARK, for instance. I mean, there's nothing stopping this thing from a decent pullback, even from 110, because valuations have gotten a little lofty. All right, folks, stay tuned. We'll come back to finish up the show. We got S&P's positive by 12. Still time to give us a call, 877-927-6648. Be right back.
Sharpening your skills as an investor is like getting better at playing a musical instrument. You have to practice, sure, but you also need excellent instruction from experts. At TFNN, you'll get advice and guidance from the authority in technical market analysis. And it's not just dry, tedious text either. TFNN airs live financial content streamed live on TFNN.com and TFNN's YouTube channel with Tiger TV, live every market day from 8:30 a.m. to 4 p.m. Eastern. For free. Each host is an experienced trader and gives their take on the market while taking calls and questions live from around the world. From the moment the market opens until the closing bell sounds, Tiger TV has 8 different shows with expert hosts to help you make the right moves with your money. Watch online at TFNN.com or on TFNN's YouTube channel and become the investor you were born to be. TFNN, educating investors.
Markets can rise and fall like the tides. Subscribe to Basil Chapman's newsletter, The Opening Call, and you too can ride the wave. Basil Chapman is an authority in technical analysis. His Chapman Wave trading system has been helping traders identify trends and capitalize on momentum in the markets since 1984. TFNN invites you to test Basil's proprietary Chapman Wave trading methodology with a monthly subscription to the Opening Call newsletter for only $149. Your subscription to the Opening Call comes with a 30-day money-back guarantee, as well as daily market updates on key indexes, stocks, and commodities. Ride the wave. Sign up for the Opening Call risk-free today.
Introducing Primal Edge.
Today, it's even more important to take a supplement that complements your health. Primal Edge is specifically formulated to boost your immune system and help with weight loss, better sleep, stress reduction, and the need to detox.
Our early ancestors found all their nutritional requirements in the wild environment. But today, our food sources don't contain the vitamins, minerals, and nutrients that we need to stay healthy and strong.
That's why we need Primal Edge Daily Nutrition. It includes a special blend of ionic, soil-based vitamins, minerals, fatty and amino acids in an easy-to-use liquid form.
Primal Edge is powered by highly concentrated humic and fulvic acids, nature's preferred delivery system. They've been called miracle molecules because, like sunlight, air, and water, without them, life cannot exist.
That's right, Ellen. They ensure we receive all the nutrition we need to be healthy and thrive. We take it every morning.
Primal Edge. Just $89 exclusively at TFNN.com.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Welcome back, folks. We got S&P's up about 13 points right now. The Dow holding on to the gains, up about 262 points right now. And we got the Russell up about 16 points right now. In terms of earnings, what we have going on, let's see. After the bell tonight, we got Costco. We get Gap. Interesting, you get that Gap Walmart deal coming out. We got Ulta Beauty, and we got Salesforce, as I talked about. So let's jump around. Costco will kick things off with quite a V formation for Costco. We trade down to 310 on the March 8th lows. We're back up to 386 right now. We're up about 0.3%. Costco, gotta love the one-day expected move, folks. You're talking about a $386 stock. They got about an $8.29. Not really a big move, right? You're talking about just more than 2%. This is what you want to keep in mind if you're trading options, folks, okay? If you're trying to sell premium in a company like Costco, and it might be the thing to do, because Costco is not a very volatile tech stock or something like that, right? That's why you're seeing just over a 2% move priced into their earnings for, priced into their options for earnings tonight. $8.28 move priced into their numbers for Costco. We'll jump around. What else we got? We got Dell coming out with their numbers after the bell tonight. You're talking about just more than a 4% move on their numbers. We also get Ulta Beauty. That one always has a little bit of volatility, and there we go. You're talking about a $20 move, okay? $20 move on a $324 stock. There's a move for you. Let's pull up Ulta Beauty. Been shopping around since about February. You put this thing back on a 3-year weekly, and we're pushing basically the highs at 368. We're sitting at 324, remarkably higher above the 124 low we had at the lows of COVID. But that's quite a move. That's quite a premium that they got priced into options for Ulta, and we'll finish it up, as I mentioned, CRM. We have some CRM in my newsletter. They are coming out with their numbers after the bell tonight. Salesforce, talking about almost a 5% move priced into their numbers at $11. And Salesforce has been chopping around for a while since that huge acceleration higher on August. We pull back, and we're stuck between about 220 and 240. All right, folks, stay tuned. We got our man Basil Chapman. He's coming up next with the Tiger Technicians Hour, live from 10 to 11. Fast Market from TD Ameritrade, Thinkorswim. I'm sure they're going to be talking about. They'll be talking about Salesforce, I bet. We'll see what else they're talking about. We got a lot of earnings coming out tonight. And then, of course, coming into the long weekend, Dow up 250. Thanks so much for starting your day with me, folks. Stay tuned. Our man Basil Chapman, he's coming up right now. Thanks so much, folks.